Our Fed correspondent, Brian Cheung, was listening in on that testimony, and he's here with more. Brian, did he actually ever speak to the fact that bond yields are rising right now?
He did. I mean, that was timely because we were seeing quite a lot of movement in the lead up to the hearing that kicked off around 10 a.m. today. You saw the 10-year rise as high as 139 basis points and the 30-year rising as high as 222 basis points in the lead up to that testimony. But as the chairman was speaking, you did see those bond yields pair a little bit of those gains, likely owing to a little bit more calm that the Fed chairman offered in terms of his outlook for the economy and the Fed's insistence to keep accommodative policy for at least quite some time. But on the labor market recovery, the Fed chairman said that it has slowed. And on inflation, he said that that might be a good problem to have, but didn't appear to think that those things would be either large or persistent. But very much in view was his overall outlook. It sounds like the Fed is still far away from getting its substantial further progress before it tapers QE. Here's what he told the Senate Banking Committee this morning.
Once we get this pandemic under control, we could be getting through this much more quickly than we had feared. And that would be terrific. But it's not done yet. The job is not done. That's the thing I keep coming back to, is we've got to finish the job with the pandemic.
Got to finish the job with the pandemic. So the Federal Reserve still with a lot of work to do, and work could mean keeping those rates low and keep that quantitative easing going for right now. That could actually allow inflation to moderately overshoot its 2% target, which again, Fed Chairman Powell saying that might actually be a good thing. So interesting to watch in the coming months.
And Brian, I know you have a story that moved on our site earlier today about inflation. You made the case for inflation already being here, whether you look at food prices or raw material costs. And I guess the question then becomes, if it's already here, how high is it going to go and how long is it going to last?
Yeah, absolutely. A valid question that we're getting answers to from the slew of earnings calls that have been coming in this quarter. You could see it in a wide-ranging variety of industries when it comes to Wingstop, for example. 27% year-over-year increase in the price of bone-in wings. That creates pressure on the company to want to raise prices, but they have a different inflation hedging strategy, if you will. For them, it's using different cuts of chicken. They've been trying to pilot, for example, using thighs at some of their restaurants, although don't necessarily expect them to change their name from Wingstop to Thigh Stop, at least for right now. And then on the other side of things, you look at more hard materials like resin, for example. The price of that has gone up by 8%. The CEO of Clorox saying to Yahoo Finance actually last week that also hasn't spurred them to immediately raise prices. They have another mitigation strategy, which would be simply to try to increase cost effectiveness, reduce costs so that your margins can be the same. Now, for the Fed, this is all a good thing. And in fact, you see the likes of Wingstop management saying even the price pressures on chicken wings are likely to be transient. That means that they're echoing what the Fed is saying and saying inflation is not going to be a permanent fixture of the post-crisis economy, that it's just going to be a little blip up for the time being. That could mean that prices are not going to spiral out of control as maybe some would worry, and that if inflation does happen, it should be pretty under control and well maintained as long as the Fed can keep an eye on that.
All right. I'm not so sure the market is believing that just quite yet, but thanks for laying it out for us, Brian Cheung.